Good morning, YouTube. It's been a while since I've been through just the money moves that I've been making in the background, stocks, real estate, crypto, sales companies, and so I wanted to give you just a little rundown of the things I've done, and just a basic overview of why I did them, to give you a more complete picture of what I'm working on. So let's start right into this. Number one, in real estate, I bought a new rental on Friday. If you take the rent and you take off expected expenses based on the other houses I have, so I kind of understand what the expenses are for that house, I come up with about a 6% return on the money that's in the house after I pay the expenses, which, based on the payment and the way I financed the house, gives me a negative $292 per month cash flow. Um, does that bother me? No, because it's part of my overall how I manage. You have to manage cash flow, capital, and profits, and I generally manage to try to maximize profits both in the short and long term, and capital secondarily, cash flow last. So a lot of times I will take a negative cash flow position on a new investment and then work out of that cash flow position, because the profit is already there. The cost of the money was 7.25% on the part that I borrowed, and then I put cash down, um, based on what the bank wanted and what I wanted to put into the house. And so I also looked at two other houses, one in the Kansas City area and one in Arkansas. I didn't actually look at them. I looked at them online. I called the agent. The agent called the person selling the house and said, hey, you have offers. What price is it about going for? Is it reasonable for us to pursue this? And they both had offers over listing price on these houses. They were listed a little low. And so we didn't pursue them any further. But we actually didn't walk through those houses. We're not walking through houses before we check on offers anymore. Um, we'll walk through after that to see what the estimated expenses would be on the house, and then talk about the price of that based on those expenses. Um, Still dollar cost averaging into Walmart, which I used as a Walmart stock as a lot of the original funding for my real estate deals as that down payment, because I had a DCA going into that stock. Home Depot, I'm still watching. It was at about 315, but it's bouncing around a lot. Before it's down to 292. So I'm looking for it to come down, quite a bit more than it was before I'm going to put very much into Home Depot, additional to what I currently have in there. But I wanted to show you that because my actual investments are very simple. I don't have a lot of stocks or ETFs. My ETF that I have is VIG, which is Vanguard Dividend Indexed ETF, which is stocks that traditionally increase dividends over time and have for a long period of time. And so I'm watching to buy that. It has got very close to the threshold. My threshold on that is about 150. It's got down to 151, 155. Now at about 145, I start making money in that investment. And so I'm not really going to buy a larger portion until I'm going to make money on the investment. And so I would buy some at 145. I would buy some additional that drop below that. I would like to own more of VIG. That's a core holding that I have. Pepsi, I have not bought Pepsi, but I would like to add that to my portfolio, a very small set of stocks that I have. From a crypto standpoint, once the Celsius exchange went bankrupt, the risk on Coinbase, on Celsius, on Nexo, and all those exchanges went up dramatically. Since then, BlockFi has gone bankrupt, and because of that, I pulled all that crypto off exchanges, and because it's off of exchanges, I no longer am getting interest on the crypto from that standpoint, and because of that, that was my reason for buying into it. It was not for buy it low and sell it high. It was just to gain interest on it, and so I sold out, like I told you before, of all my crypto, with the exception of I have some Solana that is staked on my Ledger Nano, that is staked on, it's not Coinbase, on let's see, on Solflare, and so that doesn't have an exchange risk because the Solana is still on the device and I'm still gaining interest. Now the price of Solana has gone down, But I'm just holding that it's a very, very, very small experiment. And then I have a Bobcat miner that actually runs behind me on the shelf, and that gets paid in helium, which also has been going down as the crypto market has gone down. From a learning standpoint, I still have Paramount, HP, Citi, and Ally. These pay dividends. I do like getting the dividends. I doubled down on my Paramount and Ally as the price was lower, but this is kind of an experiment for me that I'm watching. I think at this point, I would probably sell out of HP for sure, and possibly Citi, and just go with Ally and Paramount going forward. I added 3 treasuries to my cash holdings, on top of the one that I told you I bought last time, and that is because I have some real estate debt that I could pay down, but it's a lower interest rate than the treasury. So instead of paying that additional down out of my cash flow, I'm putting it on a treasury that then matures before that first real estate loan comes up. And so that's what I'm putting in treasuries. And I also had some cash in the HSA that was uninvested. And so because I learned how to buy treasuries, I bought a couple treasuries in that account just to hold my cash in that until it's time to buy HP or VIG or Pepsi. And those are on the secondary market, so I can actually sell those with very little risk very quickly to buy the other investment if it comes up. But until then, I'm gaining like 4.3% interest on my money. I paid off a line of credit that I had used to finance a business, and I can go into the details of that business on another call. It's a little interesting how spending a certain amount of money can be done in various ways that decrease the risk and the amount of money that is on the capital management side. And so I paid off that line of credit, which was at a variable interest rate. That would reduce my risk of that interest, and it also increased my cash flow by $300 per month, which meant above when I was showing you how that house was negative $292. Basically, I'm net back to $8 positive to this. In addition, we had one doctor's bill that was 0% interest, and I was paying on a credit card every month, and that went away. That also increased my cash flow by about $292. So net I'm up about $300 a month, plus dividends on the treasuries and dividends on the stocks. And so that's the net of this time period. From this standpoint, the way I'll talk about later in another video, how I view this investment and what I'll be doing with that going forward, and how I think I can make more profit on that very, very, very easily. Sales companies, there's 2 recent closeouts in running and soccer shoes, which was running was a very, very good deal for us. And selling, we're doing some newer sports, some baseball, some things, and I have 2 people listing part-time, and one responsible for the shipping in that company. But just wanted to share this stuff with you to show you what I was doing from an overall perspective. Am I busy? Not terribly busy. I would say I did a good job of letting people do their job, not stopping them from doing their job, encouraging them to do it, making sure that they're aligned to high-level objectives, and allowing them to figure out the details. That's kind of my management style. So I just wanted to share this stuff with you guys. Hope it's valuable, and I will talk to you later.